All right, my fellow investors, Dave here. Apple, AAPL, has been on a wild ride recently, and you're all asking, should I buy? Today, we're diving deep to uncover if this tech titan is ready for its next big move. So, what's the buzz around Apple right now? Well, the general sentiment is cautiously optimistic, driven by their stellar Q3 FY25 earnings. We're seeing strong performance across iPhone, Mac, and services, and even accelerated growth in key markets like Greater China. But as some headlines, like those from CNBC, remind us, there are always geopolitical whispers, especially regarding US-China relations and the anticipation for future product cycles like the iPhone 17. The market is digesting this mix of robust current results and future uncertainties. For those new to the show or just needing a refresher, Apple Inc. is a global powerhouse. They design, manufacture, and market everything from your iPhone and Mac to the Apple Watch and AirPods, and a massive suite of services like Apple Music, Apple TV Plus, and the App Store. They're a true ecosystem player, serving consumers, businesses, and governments worldwide. And what's Apple saying themselves? Their management is hinting at accelerated growth around the world, setting a pretty high bar for performance. Now, let's reconcile that market narrative, the good earnings, the geopolitical concerns, the future product hype, with Apple's own confident guidance. We've baked all of this into our multi-scenario model to give us a clearer picture. First up, our base case, which we're assigning a 50% probability. Why 50%? Because, folks, while the technicals are looking strong with that recent bullish flag breakout, we still have to acknowledge Apple's premium valuation. This scenario assumes Apple continues its current impressive trajectory. Solid Q3 FY25 results, 10% year-over-year revenue growth, 12% year-over-year EPS growth, records across the board, and continued growth in China. We're projecting EPS growth of 9.3% for the next year, which brings us to $7.19. Applying a forward PE multiple of 35x, which is a bit conservative compared to its current high PE but still premium, gives us a fair value of $251.65 per share. Next, the bull case, and I'm giving this a healthy 35% probability. This isn't just wishful thinking. The technicals are screaming. Our analysis shows Apple just broke out of a significant bullish flag pattern, and if it holds above $259, our next upside targets are $279 and $290. This technical strength strongly supports an optimistic outlook. This case imagines an even stronger performance, a highly successful iPhone 17 cycle, big wins with new products like Vision Pro or other AI innovations, and services revenue continuing to soar past records. We're looking at an accelerated EPS growth of 15%, bringing us to $7.57. With robust investor confidence, we'd apply a higher PE of 40x, landing us at a fair value of $302.80 per share. Finally, let's talk about the bear case, which I'm assigning a 15% probability. While not impossible, the immediate technical signals are very positive, making this less likely in the short term. However, we can't ignore the risks. This scenario considers major headwinds like intensifying US-China tensions impacting sales or supply chains, a concern frequently mentioned in financial news. A global economic slowdown hitting consumer spending or increased competition eating into market share could also play a role. Our technical supports are at $245 and $229, and a break below these could signal this scenario playing out. Here, we project a significant slowdown in EPS growth to 5%, leading to $6.91. With increased market uncertainty, a PE of 30x would be more appropriate, giving us a fair value of $207.30 per share. All right, let's pull up the chart and dive into the pure technicals, folks. This is what we're seeing. AAPL just broke out of a bullish flag pattern. Now, if it maintains above $259, that's our key level to watch, because if it holds, the next upside resistances are clearly marked at $279 and then $290. On the flip side, the critical supports, the safety nets if you will, are at $245 and further down at $229. So, putting it all together, is Apple a buy? Based on our detailed analysis, the strong Q3 earnings, the optimistic management guidance, and especially that recent bullish flag breakout, my verdict is yes. It certainly looks like there's significant upside potential here. The probabilities heavily lean towards a positive outcome, with the bull and base cases dominating the landscape. Apple is well positioned for continued growth. Now for the actionable part. Considering our scenario fair values, if you're looking to enter, keep an eye on anything around our base case fair value of $251.65. If it dips towards our first technical support at $245, that could present an even more compelling entry point. For those with a longer-term view, scaling in around these levels could be a smart move, especially if it maintains above $259. All right, my friends, that's our deep dive on Apple. What do you think? Is the bottom in? Let me know in the comments below. If you found this analysis helpful, smash that like button, subscribe if you haven't already, and hit the notification bell so you don't miss our next episode. Until then, keep those portfolios green. And remember, folks, I'm just Dave, not a financial advisor. This is for educational and entertainment purposes only. Always do your own due diligence and consult with a professional before making any investment decisions. Investing in the stock market involves risk, and you could lose money.